If you are trying to build credit or fix your credit score, you have probably come across Kikoff. It is often recommended as a beginner-friendly credit builder, but the real question is this: is Kikoff actually worth your money, or are there better options out there? In this video, I will break down the real pros and cons of Kikoff, how it works, who it is best for, and who should probably avoid it. By the end, you will know exactly whether signing up for Kikoff makes sense for your situation. Let us start with a quick explanation of what Kikoff actually is. Kikoff is a credit building platform designed to help people with no credit or poor credit history. Unlike traditional loans or credit cards, Kikoff does not give you cash up front. Instead, it reports positive payment activity to the credit bureaus, which can help improve your credit score over time. Kikoff mainly works through small monthly plans. You pay a low fee each month, and Kikoff reports that payment as an on-time account to the credit bureaus. Over time, this helps build payment history, which is one of the most important factors in your credit score. Now let us talk about the pros of Kikoff. One major advantage of Kikoff is how easy it is to get approved. There is no credit check required, which means even if your credit score is very low or you have no credit at all, you can still sign up. This makes Kikoff especially attractive for beginners, students, or anyone recovering from past credit mistakes. Another strong benefit is the low cost. Kikoff plans are generally affordable compared to secured credit cards or credit builder loans. You are not required to make a large deposit, and the monthly fee is usually manageable for most people. This lowers the risk for users who are just starting out. Kikoff also helps build payment history consistently. Since the payments are automatic and predictable, it is easier to stay on track and avoid missed payments. On-time payments are the biggest factor in your credit score, so this consistency can be very helpful. Another pro is that Kikoff reports to major credit bureaus. This means your positive activity can actually show up on your credit report and contribute to your score improvement. For people who currently have very few accounts reporting, this can make a noticeable difference over time. Kikoff is also very simple to use. The platform is beginner-friendly, and you do not need deep financial knowledge to understand how it works. Everything is clearly laid out, which reduces confusion and mistakes. Now let us talk about the cons of Kikoff, because this is where many people need to pay close attention. The biggest downside is that you do not get access to real cash or usable credit. Kikoff is not a loan you can spend, and it is not a traditional credit card. If you are looking for money to cover expenses, Kikoff will not help you in that way. Another limitation is that Kikoff alone will not give you a strong credit profile. While it can help boost your score, it does not replace having a mix of credit types like credit cards, installment loans, or auto loans. Relying only on Kikoff may slow your long-term credit growth. Some users also report slow credit score changes. Credit building takes time, and Kikoff is not a magic solution. If your credit report already has negative items like late payments or collections, Kikoff will not remove them. It can only add positive history going forward. Another con is that results vary by person. Some people see improvements in a few months, while others see little or no change. This depends heavily on your starting credit profile and how many other accounts you already have. There is also the ongoing monthly fee. Even though it is relatively low, you are still paying for something that does not give you direct financial access. Over a long period, some people may feel the cost outweighs the benefit. So who should actually use Kikoff? Kikoff is best for people with no credit or very limited credit history. If you are new to credit and want a simple, low-risk way to start building a score, Kikoff can be a good first step. It is also useful for people rebuilding credit who want to add positive payment history without applying for multiple accounts. On the other hand, Kikoff may not be ideal if you already have a fair or good credit score. If you can qualify for a secured or unsecured credit card, that option usually provides more long-term value and flexibility. Kikoff also may not be worth it if you expect fast results or need access to funds. So is Kikoff worth signing up for? The honest answer is that it depends on your situation. Kikoff is not a scam, and it can help with credit building when used correctly. However, it works best as a supporting tool, not a complete solution. Think of it as a stepping stone rather than a finish line. If you decide to use Kikoff, make sure you combine it with good financial habits. Pay all bills on time, keep balances low on other accounts, and regularly check your credit report. Credit improvement is a process, and Kikoff is just one piece of that process. If you found this breakdown helpful and you are considering Kikoff, make sure you fully understand what you are paying for and what results to realistically expect. Making informed decisions is the key to building strong credit over time.